What's good, YouTube? It's your boy back again with another breakdown of Euro USD and GBP USD. Now, before we begin, to get familiar with the concepts talked in this technical analysis, I have a playlist called the Technical Series. I will put the card up above. If you're not familiar, just go through the playlist, get familiar with all the technical concepts, and then you can follow along with the breakdown. But without further ado, let's get straight to the charts. And the last time we did a technical breakdown was a few days ago, and since then the markets have been moving. So as usual, let's start with our first pair, which is Euro USD. Now let's start from the monthly from the top and see what's going on. Well, bias is still bullish. Last swing high that was broken was to the upside, and now we're experiencing, in this current monthly candle, we're experiencing a bit of a retracement, but our bias is still bullish. Down on the 4 hour, that small retracement on the monthly can be evident by this downtrend on the 4 hour, making lower lows and lower highs, lower lows and lower highs, continuously breaking ground. Last time we did a breakdown, price was at this zone, which was previously tapped, so we did not look at this as a buying opportunity, but a zone was created here when it dropped base drop. So upon price coming to this zone, we said that we would be looking for potential trade opportunities. Now, one of our trade entry mechanisms is the 50% of the zone, and as you can see, price just came up to the 50% of the zone and tapped it. So that could have been an entry, stops above the zone. Another entry possibility would have been to drop down to a lower time frame, 15 minute, and look for something like a pin bar rejection or a bullet bearish engulfing candle, such as here. Put your entry right at the close and then stops 5 to 10 pips above that candle, and then just hold for lower prices. So as we can see, that trade idea definitely is working out, and since our monthly bias is bullish, you don't want to be holding this trade for too long, and you also want to move your stops to break even as soon as possible, and you also want to be securing profit along the way, because at any time the major trend could reverse and then continue to the upside. So right now, currently, our previous breakdown analysis is coming to fruition. People who were able to secure an entry here, congratulations, and now you're definitely in profit. Make sure you have moved your stops to break even and secured some profit, and then just trail your stop as price just continues to go down. Right now, we anticipate, if price does come back to this level, since it's tapped it, this will be the third tap. We anticipate price to potentially break, and once we get a 4 hour closure beyond this zone, we can delete this zone and then anticipate price going to the next zone, which is way down over here. So that's what we have for Euro USD. Now let's go to our next pair, which is GBP USD. Now for GBP USD, same way, let's start from the monthly chart. Previous swing that was broken on the monthly was to the upside, so yes, we are bullish. Our bias is bullish. Here currently the monthly candle has come down, retraced, and then it has pulled back, so meaning the retracement might be over and it might continue to the upside, or it might just be playing lower time frame politics. Either way, our main bias is bullish, and as such, we know where to position ourselves and how to manage our trades accordingly. Now when we go down to our 4 hour time frame, which is our trading time frame, last time we did a breakdown, price was still between these two major zones, and we can see price is still within those two major zones. One thing of note is there was a new zone that was created here within this zone. As you can see, the two elements of our zone creation. If you're not familiar with this, how to draw the zones properly, just go to the technical series, or I'll post another card up here specifically identifying how to draw zones properly. So one of the two of the conditions is for there to be an impulsive move and then to a break of a swing, and as we can see, those two conditions were met here. So there was definitely another zone here. I call these zones are nested because it overlaps with another existing zone, which kind of actually strengthens the the zone itself. And when price came up here after the impulse that broke this swing high, price then created a swing low, and then ultimately there was an impulse that broke this swing low. Now there was a swing here, and this swing was broken, but it wasn't impulsive because the swing just wicked above it and then came back down. So it was only one of the two conditions were met. A swing high was broken, but it was not impulsive. In this case, this swing low was broken impulsively, so that meets the two criterias: a swing being broken and an impulsive move from that level. So yes, we could draw another zone over here. Now based on these two zones, you can see that we have created a vacuum in price, a little vacuum spot between here and here. Price came back down, tapped this nested zone, and then boom, it just shot right up to this zone. So this would have been a nice trade had someone caught it. And if let's see the amount of pips between the two zones, that was around 97, just under 100 pips. Very nice intraday trade. And as you can see, it gave no frills. There was no politics. It just shot straight to target. That's why I like these vacuum trades, as I like to call them. And now let's look at entry possibilities for this trade. Well, this is where the trade entered. Let's go down to the lower time frame and see what happened at that time. So of course, going back to the 4-hour time frame, one of our entry mechanisms is so if you're not familiar with entry mechanisms as well, I'm going to post a link up here. There's a video that I created, 3 different specific type of entry mechanisms that we use in the trading wisely approach. But one of those entry mechanisms is to enter at the top of the zone and then place your stop below the zone. And another entry mechanism would be to place it at the 50%, and another one was to drop to a lower time frame. As you can see, obviously this zone is a bit huge. It's around 70 to 80 pips, so you wouldn't want to have a 70 to 80 pip stop loss. So as such, the first entry mechanism might not be that favorable. Had you used the second entry mechanism, price did not even reach this, so the trade would have left without you. The only entry mechanism you might have been able to be successful at would be the third entry mechanism, which is dropping to a lower time frame. So now if we do drop to our lower time frame, we can see that yes, it did provide a nice entry mechanism, which is here. And what's even better about this entry mechanism, it came after the second drive. The first drive came, tapped the zone, did a little retrace. Second drive came down, took out the low, and then gave the signal. As you know, I like to on a lower time frame, I like to wait for at least the second drive, because price tends to do that. Sometimes it does 3, but if you wait for 2 as a rule of thumb, you will be definitely in better odds of getting the better entry and not being taken out prematurely. Let's just put on our session indicator to see when this signal happens. This signal occurred in London session. Another signal occurred right at the open of the New York session. Nice bullish engulfing candle, which had you missed this initial signal, you could have used this as a confirmation to enter and then take away. And as you can see, barely any drawdown, price just shot up and then just continued on its way to targets. So that was a nice definite trade on gbpusd that happened within the last week. And then now that we're in prices within this zone, obviously you could have entered here, but it's because the zone was for a short, because this is a bearish zone, right? So the zone itself is around 80 pips. So again, you don't want to have a 85 pip stop loss. So the other entry mechanism that might be possible would be to do a 50%, but even a 50% entry would give you around 40 to 50 pip stops. I generally don't like stops greater than 30 pips. So the only third option that we would use would be to drop down to a lower time frame. Now dropping down to a lower time frame within this zone right here, what we would do is we'll wait for a bearish signal, a nice bearish signal within the zone. So as you can see here, there was not much of a bearish signal. Here we had a nice bearish engulfing candle, so this could have been an entry. But then had you put your stops above 5 to 10 pips above this candle, definitely price would have came back and taken you out. But that's okay, we don't worry. It will just sit on our hands and wait for a potentially better entry. And as you can see, at the top of the zone we had a nice pin bar rejection followed by a bearish follow through. So at any point after the close of this candle, you could have entered, place your stops above. The best place to sell is at the top, the best place to buy is at the bottom. So this also coincides. Let's put on our session indicator. As you can see, this signal occurred in the London session, so that's another confirmation in terms of time. Market makers are around, money is flooding through the markets, so you would have entered there. And now from the entry to where price is currently now, that's around 60 pips, and your stop would have been somewhere around 5 pips above the high, so it would have been around 20 pips. So right now you would be sitting at a comfortable 1 to 3 profit, and price has not even left the zone yet. So by now you would have moved your stops to break even and you would have secured some profit, because we are going against the trend. Remember, the monthly is bullish and this is a bearish trade, so you want to move your stops to break even as soon as possible and secure your profit as the trade progresses. So that's where we currently are on gbpusd. We will be anticipating price to go lower, but if price does resume and go higher and then wipes this zone, this current zone above this zone is a fresh zone, so it hasn't been tapped before. So if price comes here, we would be looking for bearish signals to potentially go short. That's what we have currently for gbpusd and USD/JPY and EURUSD. Thank you very much for watching. Please comment, like and subscribe so that the channel keeps on growing, and stay tuned for more breakdowns along in the next couple of days.